Okay, hi. This session is going to be about discrete log contracts and RGB. And my name is Priyank. I've been involved in Bitcoin since 2015 in different projects, and we are doing these sessions from last year. So we have Matthew from, he is the CTO of Atomic Loans, and he has been involved in legality, working on cross-chain atomic swaps, and he has been researching about DLC and RGB recently. So we are going to discuss that today. You want to add
Awesome.
something to that introduction?
Yeah. Thanks for having me on here, Priyank. Yeah, I originally got into Bitcoin back in 2014. It was actually my dad that introduced me to Bitcoin. Funny enough, and just since then was originally working on atomic swaps cross chain with Liquidity, and after that was focused on building non-custodial protocols for Bitcoin and allowing for more advanced financial tools. So more recently, I've been looking at how RGB and DLCs potentially can work together, but we'll get more into that throughout the session.
Great. So I have few questions, like 5 or 6 questions, which we can discuss in this session. Let me start from the first thing. First of all, I have not done enough research about RGB yet. I need to read a lot about it. But I've recently joined the Telegram group and following different people. So maybe I'll get to know more things in future. About the discrete log contracts, I think only Blockstream tried one of the applications, which was peer-to-peer derivatives in 2019. Apart from that, I'm not sure of if a lot of people have experimented with discrete log contracts or anything that involves such thing. But I see a lot of opportunities in that. It is something that is really interesting. Not sure how much we need to involve oracles in that and the dependencies, but it is something that needs to be explored more.
Yeah, absolutely. Maybe what would be helpful to do, like for the listeners, just a quick maybe intro to DLCs and then afterwards RGB, just so everyone's on the same page, and then we can go into kind of what a few companies have been working on with DLCs lately. Yeah, and so for DLCs specifically, like just for a quick primer, it's essentially what a DLC is, a discrete log contract. So it's a Bitcoin contract that allows for a price feed to be used to enable more advanced financial tools for Bitcoin. It addresses some of the scalability and privacy concerns, and they've tried to design it in a way that is fairly trust minimized in terms of what is required for the Oracle to provide external data. And the basic idea is that you can create these various contracts where an Oracle publishes signatures for a specific price, for example, and then when the contract actually closes, then each party is basically receives some amount of capital from that. So an example would be, for example, I want to enter into a discrete log contract that tracks the Japanese yen all the way until market close, for example, or getting exposure to a certain assets or for a specific period of time. So one of the projects or one of the teams that's been looking into DLCs a lot lately has been SureBits. They actually created a demo for doing a discrete log contract for actually, I think it was, I can't remember if it was betting on the price of Bitcoin. So I think, for example, you could have a situation where Alice and Bob maybe enter into a discrete log contract, and they want to bet on the price. What happens if the price of Bitcoin is above $10,000? Alice bets that it will be above $10,000, and Bob bets that it will be below by the end of the month. And so at the end of the month, what happens is the oracle either reveals the signature pertaining to it being above $10,000 or reveals the signature for it being below $10,000, and that determines what each party who wins the bet essentially, and who gets all the Bitcoin. So that's the basics of a discrete long contract, but it can also be used for for other financial tools other than just binary options or bets, for example.
Yes, lot of use cases, because basically it's giving you the option to have the conditional payments, so you can decide different conditions based on how you want to design the financial applications, or what is the use case for that company or a user. I have few ideas, like maybe I can discuss those ideas with you. For example, uh, there are few people in Ethereum who had been working on decentralized insurance product. So I was researching about their projects, and uh, I had written one article which can be used to create similar things using Bitcoin, or maybe you don't have exactly decentralized products, but they can be something which is trust minimized, which is non-custodial, non-KYC. So the better than the insurance products which are used right now. Uh, so there can be a lot of possibilities. What are your thoughts on it?
Yeah, I mean, I think my thoughts on like insurance specifically. So I'm assuming the Ethereum you're referring to probably like Nexus Mutual. I think they've created, quite a few. They've tried to create a comprehensive product for insurance. The specific thing that they were really focused on was more for like smart contract insurance. Since you have hacks every day about something went wrong with a smart contract. And so a lot of people, kind of had concerns about that. Hey, I can use this non-custodial tool, but what is the smart contract risk associated with that? I think one of the nice things about Bitcoin is that we run into those problems a little bit less. So if you have a Bitcoin script contract, I mean, it's usually very simple. It's very easy to understand, and so generally there isn't a lot of like smart contract risk associated with that. So I guess like the first question to ask for insurance is like, what is the thing that you're actually insuring? So in Bitcoin specifically, it might not be necessary to actually do smart contract insurance, unless of course. I know like Blockstream has been working on Simplicity, which is supposed to be like a smart contract language for Bitcoin. I haven't looked into it too much, so there might be an opportunity there for something. But the other thing might be like, hey, like in terms of DLCs, like say if I'm using a more advanced like financial tool, and what happens to me if the Oracle screws up? Can I have insurance against the Oracle being malicious? But I guess the question at the end of the day is who is willing to provide insurance for that? So those are kind of my like first thoughts that I have when it comes to insurance.
So in this case, I was trying to create or think about the ideas which can be used to cover the life of an individual. Like if somebody dies tomorrow, he can be insured. So there are a lot of things we need to consider in this, because there can be a lot of cases of fraud, and how do we decide if someone is alive or dead? So I mean,
Yeah, well, the other question with that is that if you create a if you create a decentralized, or I guess it would be some like I guess first of all, like how do you determine if someone is actually dead? And then also the other thing is that by creating that insurance and kind of having it out there, so that people can like does that actually create like a market for assassinations? That's the question I always ask with life insurance. But yeah, I guess like the idea there was you would have some type of oracle that determines whether a person is dead or alive. But then I suppose that Oracle needs to like, needs to report on whether that person is dead or alive properly. So I think that's definitely a tough problem.
Yes. Next thing, I had also researched about a different project which was trying to solve the problem which is faced by ICOs or the IEOs or any person or company trying to get some funding in crypto for starting their business or idea. So the problem is a lot of ICOs are considered as scam, and that is true. A lot of ICOs are really scams. So how do the legit people who are trying to create some ideas and they're not uh, trying to scam people, how do they go about getting some funding? So uh, there are some people, I don't remember the name of that project, and I'll have to search for that link, but they had created a model in which they were using uh, a fund in which different investors were sending their money. Those funds were used to invest in something, like it can be anything. So for example, it is used in yield farming or anything else. It is used in some borrowing lending markets in Ethereum, or it can be used in Bitcoin in Joinmarket, or if you're using peer-to-peer derivatives using discrete log contracts, it can be used in that. So those funds at the end of the day, or maybe after few days, will give you some interest on the amount you have used. So you can give back the amount which you took from the investors and still have some extra amount with you, which can be your funding, which can be used by you, uh, the company, in your project or upcoming idea. So in this process, you're not scamming anyone. You're making money from the investors in a non-custodial way and using the interest part for your project.
Interesting.
Does that make sense?
Yeah, I mean that's interesting. I guess like I guess my biggest question for that is always, there's at the end of the day, if the invest and yeah, I'd be curious to dig into that a little bit, because I suppose that like the investors would, so in that case, would the investors give you money, or do they give you the money and essentially to invest or make interest somewheres, or would they simply invest that money and make interest and then give that interest to you? Because in that case, it would kind of be the same thing as just making an investment in the first place, wouldn't it?
Yes, even that is logical, but maybe this problem, the problem here is a lot of ICOs are considered scams. So I was only trying to solve that problem, but in solving that problem, maybe we need to consider a lot of other things.
Yeah, I mean, I think like in general, like if you want to become like a sustainable business, like you need to figure out like a monetization strategy that's not, hey, we're going to create a token. I think generally, a lot of these projects, what they have done and what they have created is very interesting. But like, I always wonder, like, what are you doing to become a sustainable business over a longer period of time? So you can go and you can create some type of token, and you can have it sit there, and maybe today it all of a sudden has a market cap of $1 billion, and that gives you a ridiculous amount of runway. But what happens in 3 or 4 years when that yield farming is done, or whatever activity that's involved with that is finished, and the value of your token is not very large anymore. So that's kind of the question that I always put forward. And generally, I feel like most of the businesses that are built in Bitcoin are really focused on building sustainable businesses that, they provide a service and they provide value, and they take and they monetize by, taking a fee somewheres here or there in order to keep their business running. That's kind of what I think at the end of the day for, makes a lot more sense and is a lot more sustainable for a business to do. But that's my 2 cents.
Okay. Next thing, have you tried Joinmarket, CoinJoin?
I have not actually, but I've done a lot of coin joins on, say, like Wasabi, for example. So really like what they're doing there, but I have not tried the one that you mentioned.
So in Joinmarket implementation of CoinJoin, they have a open order book, and it works like they have a side which is makers and the other people are takers, obviously. So the people who are providing liquidity for the other people who are looking for privacy using CoinJoin, they get some fees for every transaction that happens. So this is achieved using some kind of smart contract, which is beyond my understanding, to be honest. But that is the idea, and that is the description which is even written on their GitHub repository. So I was wondering if that is, if we can create a borrowing lending market using such a setup which involves broadcasting of fees. How much fees are you willing to pay for borrowing something, or how much fees do you want in return for lending your Bitcoin? So is that something, maybe you can read about Joinmarket and try it later, and then you can have some thoughts on it.
Yeah, well, I think there's actually something interesting there. So first off, I think the idea of coin joins itself is a very interesting idea, and the way that they've done it in Wasabi, I think with a having a coordinator having that as a sustainable business, I think is very smart, smart idea, and has really benefited the community. But the other thing there, I think that's also interesting is kind of this concept of enabling a market for like lending and borrowing. So generally, I tend to think, so if you're talking about a lending market, you generally need some type of stablecoin involved in the system. Luckily, RGB has been working on enabling assets issued on top of like Lightning Network, for example, to be created where you could allow for USDT to be used on top of Lightning Network. But what's interesting there is if you combine like DLCs with USDT, like RGB USDT, for example, you can create really interesting, like the ability to have like a Bitcoin backed loan, essentially, using those tools. And so I imagine that a lending market using kind of a similar, order book, if you will, similar to what exists on the CoinJoin solution you mentioned, that might be something that's interesting to test out. But yeah, I think that specifically is quite interesting.
Okay, and coming to the next question, which is stable coin using RGB token. I think we had discussed this in the RGB Telegram group, but I think we need to research more on this, because using USDT has its own risks. For example, they have some legal thing going on in which they need to prove if they really have the fiat for the USDT tokens that have been created in the past. So for avoiding such kind of risks, or being dependent on a centralized setup or a company, we might even think of creating our own stable coin. The idea which I had was for example, if we create 1x short position on BitMEX right now, so that is equivalent to having USDT at the current Bitcoin price. So, but the problem is I cannot use that anywhere. It's like it stays on BitMEX, so I cannot move it anywhere or use it as a stable coin. But if we can have such setup in which we use Bitcoin settled forward contract here, which achieves the same thing, but we need to have a stable coin, a different token which is issued using RGB or something else.
Yeah, so that's actually really interesting because what you just described. So I think this stablecoin idea, there's actually two ways to achieve it. And the first one that you described of doing a 1x short on BitMEX, you can actually recreate that exact type of contract using a DLC. So for example, say in a DLC you typically have two parties that enter into the contract. And in this instance, and this specific one could actually all be settled directly in Bitcoin. So you might have Alice that maybe wants to do a 1x short position, and Bob that wants to do maybe a 2x long, for example. So Alice, for example, would put up half a Bitcoin. Bob would put up 1 Bitcoin. And what happens essentially is you simply have the Oracle reveal prices whenever these parties want to close the position that correlate with a 1x short or 2x long position within the DLC. Now, what's interesting about that is basically what happens here is Alice is doing a 1x short. So if she has a position of, I don't know, 1 Bitcoin in a 1x short, and then she holds another. Well, in this case, I said half a Bitcoin. So she has half a Bitcoin in a 1x short, and then she has another half a Bitcoin that she's just holding. Then essentially she has a stable coin. Now the problem there is it's not very easily transferable. What's cool though is that Surebits has actually been working on ways to allow for DLCs to be transferred. So this can be done on top of like Lightning Network, for example. So say if you have Alice and Bob that are both part of a DLC. Say Bob wants to exit the position and maybe for example wants to trade it with Carol, for example. Well, it is possible to actually do that. However, the challenge there with Lightning Network is if Alice and Bob are in a DLC and they want to move that DLC to a contract with Alice and Carol, what it means is Alice and Carol, like all three parties need to be online, and Alice and Carol need to have enough basically balance in their payment channel in order to allow for that transfer to occur trustlessly. So that makes it really difficult to do, kind of have this work as a stable coin. But if you move, for example, over to something like a state chain, which essentially is it's not completely as trustless as Lightning Network, but it has a lot of it's essentially like the idea is you lock your Bitcoin into like a 2 of 2 multisig with the user and the state chain, and it allows you to be able to send Bitcoin to anyone else in that state chain. And so something like that could be very capital efficient because you no longer have that requirement of Carol needing to have a channel size like equal to the amount of Alice and Bob in the first place in the DLC. So that's one way to do it, is with a discrete log contract. The other way, I guess, is like with say like if you had a stable coin issued on top of RGB. Now I think like RGB itself has like different difficulties when it comes to like asset issuance. Like the first thing is like whoever issues the asset in the first place, they're delegated as the only issuer. So they would need to then delegate other people to be also issuers, and then delegate other people to be able to delegate other issuers. And so all those parties would also need to be online whenever a specific asset transfer is trying to happen. So there's a lot of like, kind of weird, weird elements that would need to be set up in order to create some type of like, say stablecoin backed by Bitcoin that would allow for a, divisible asset transfer. So that's one thing that could potentially be done. But then that runs into other problems like, okay, well, how do you ensure that there's enough Bitcoin that's actually backing that stable coin that's been created? How do you do liquidations? Well, you might be able to have some type of oracle, for example, but then that of course increases the trust. And also, how would you lock that Bitcoin in order to allow for that to happen? So I think there's a lot of questions with that on like, how would that all be maintained and verified in terms of like, maintaining the proper collateralization ratios for a type of stablecoin like that?
Yeah, oracles is again a difficult thing to solve at this moment. And maybe I need to read more about RGB. A lot of things that I'm not aware of.
Yeah. Maybe I can give a quick. I realized I didn't give a quick intro to RGB at the beginning. Maybe that would be helpful. I mean, essentially, what RGB is it's basically like a specification that allows for like assets to be issued on top of Lightning Network. So the idea here is I can issue assets on top, and all these assets essentially are anchored to specific UTXOs or addresses. So, for example, say I wanted to issue a new asset and I already have a UTXO that has a certain amount of Bitcoin in it, I could issue, or I could send USDT to that specific UTXO, for example. So that's kind of the basic idea of it. And it's all validated client side. And so the idea there is that you can have all these assets that are issued on top of Lightning Network and that can be used at that layer. And there's no need to add a bunch of data at the base layer on Bitcoin. And so it aims to solve a lot of the privacy and like scalability concerns that that exist in Bitcoin. So yeah.
Okay. And last question I have for you is, what do you think about tokens being on-chain and off-chain? What do you prefer? Like on Bitcoin, we have tried things like OmniLayer, and now things are being tried with RGB on Lightning Network, or things like side chains and all. So do you think tokens on chain really work, not just on Bitcoin, or it can be on any blockchain?
Yeah, so I think the challenge always with tokens. So I mean, we've seen what's kind of happened with something that keeps a lot of people up at late at night is kind of and especially those who work in like the Ethereum space, is the network congestion. So the amount of like the gas costs involved with using anything in like Ethereum DeFi has just skyrocketed over the last 6 months. And so I think that has really shown that having everything done at the base layer causes a lot of concerns and also really bloats the underlying network. And so I think one thing that I really like about the way that RGB is being architected is it allows for assets to be issued at layer 2 and layer 3. So rather than any additional data being required at the base Bitcoin layer, you can simply have assets that are issued, that are anchored to specific UTXOs, and that essentially allows for by default, by using Lightning Network, you're doing this on layer 2. You have the scalability elements of Lightning Network, and you don't have to worry about ever congesting the chain and making it so that if you ever like build an application that scales, for example, you're never going to need to worry about chain congestion affecting your ability to serve your customers, for example. So I think that's one thing that's like architecturally is really interesting about RGB.
Great. So that's it. Like, I don't have any more questions. Do you want to discuss anything else related to this?
Yeah, I think that was most of it. I think the only other thing is maybe talking about some more like financial tools that can be created with both DLCs and RGB. An interesting thing that we were looking into is like the ability to get exposure to synthetics, for example. So say I want to go, what's interesting is like if you generally like the way like BitMEX works, for example, is that if I want to get exposure to a certain asset, so say I want to get I don't know, exposure to like Ethereum or Litecoin or a different asset on BitMEX, generally what I need to do is generally what happens is you have a market maker that's providing Bitcoin, and then I go and get exposure to a certain asset, and then that market maker goes and buys that asset on an exchange in order to be net neutral. And that's the whole purpose of a market maker, is always to stay net neutral. Now the challenge is doing this with different types of assets. So say I wanted to get exposure to like gold, for example. Well, it's very difficult. There's not really a good market for trading between Bitcoin and gold. However, if you use if you're able to get access to a stable asset on RGB, say USDT, for example, you could have two parties that actually enter into a specific contract. So say you have Alice and Bob, and they each provide $5,000 in USDT towards a specific contract. Alice goes short gold, Bob goes long gold. Well, there you've created a synthetic exposure to gold without ever having the need for a market maker to actually go and ensure their position was net neutral, and that they were taking Bitcoin and then buying it for gold, for example. So I think like synthetics is a very interesting thing that can be enabled specifically with RGB and DLC together. And really, at the end of the day, in order to get exposure to these prices, the one thing you need to trust is the Oracle, of course. But it allows for you to have like synthetics for any types of assets. You can have it for gold, you can have it for stocks, and all this would be, settled in RGB USDT, for example. So I think that's definitely something that's interesting, because it allows for people to get access to these exposure to these assets, without needing to KYC or go through any of these processes, and they have the private keys to be able to have access to these assets. And really, the only thing they're trusting is the Oracle. So that's, I think, something that's definitely very interesting.
Yes, and we still don't have any website right now to trade the Indian stock market using Bitcoins. So maybe that can be one of the applications in future.
Yeah, absolutely. Like for example, in that situation, like why is there no way for like anyone in the world to be able to get exposure to those assets? Like there's just no good way to do that, and whatever jurisdiction you're in affects you from being able to participate. So I think that's one thing that this can really enable is access for anyone to any price exposure to any asset anywhere anyhow by anyone. So I think that's really cool.
And that shouldn't involve any KYC. It should be non-custodial. So that really solves a lot of things.
Absolutely. The other thing that's really cool is also enabling, say Bitcoin-backed loans, for example, using DLCs. So if you're able to, for example, get a loan in USDT, so the example there is like, if you think of a Bitcoin-backed loan, you can either think of it as locking Bitcoin as collateral and then getting a loan in a stablecoin, or you can think of it as, I'm going to say if I want to do a loan, like 50% loan to value ratio, or otherwise known as like 200% over collateralized, what I could do is I can either like lock, 2 Bitcoin and then get a loan for like $10,000, say 1 Bitcoin equals $10,000. Or what I could do is I could simply, I have 2 Bitcoin that I'm going to use. I sell one of my Bitcoin for, the loan that I want to get. And on the other Bitcoin that I still have left, I do 2x leverage. So if I want to get a Bitcoin backed loan in that instance, I can actually do that today using like a DLC, for example. And you could have a lender that's simply like giving me like RGB USDT, for example, in an atomic swap that allows for me to really easily enter into a debt agreement. So I think that's another aspect of like RGB and DLCs that has a very, very interesting application.
Yes, lot of things, and these are just the things we see around right now. Maybe we'll have a lot of other use cases in future. And I think this call will be only for 40 minutes. So even if we don't get time to discuss everything on this call, I'll be in touch with you in future, because I all these things are interesting and I'll keep researching about it. So I'll share everything I see, anything interesting or anything new that I am working on.
Yeah, that sounds great, Prank. I think there's definitely a lot of interesting things happening. We need to make sure that we build things properly and we don't enable shitcoinery. But at the end of the day, if we can build tools that make it easier for people to get access to uh, you know uh, to the tools that they want, then I think that's definitely exciting. So yeah,
Thank you so much for your
awesome.
time.
Thanks, Frank.
Thank you.